You know, that craving when you want something vibrant and maybe feels healthy, but also kind of indulgent.
Yeah, that specific
So
spot.
CAVA, the Mediterranean fast casual place, it seems like they're really hitting that sweet spot for a lot of people. And their latest financial numbers, well, they definitely have our attention.
Absolutely. We're going to dig into KVA Group's first quarter 2025 results today.
Okay.
And we've got a good mix of sources. Their official earnings releases, one from Business Wire, one direct from CAVA, a piece from Tip Ranks, and some analysis from the Motley Fool, too.
Right. So our goal here for you listening is to cut through the numbers, the jargon, and figure out the real story. What are the key figures, the insights, and, what's the direction for this brand?
Exactly. And it's interesting, the CEO actually flagged some challenges in Q1, mentioned economic uncertainty, some rough weather.
Oh, okay.
So seeing how they actually performed despite that, that'll be key.
Okay, let's dive right in then. The big picture for Q1 2025. What are the headline numbers that jumped out?
Well, the main story is growth, really across the board.
Yeah.
Revenue hit $328.5 million. That's a 28.2% increase compared to the same time last year.
Wow, 28%.
Yeah, and that figure is solid. It's in both CEVA releases and the Tip Ranks piece.
Okay, a really significant revenue jump. Is that top line growth also showing up, in their profitability?
It really is.
Yeah.
Net income saw an even bigger leap, actually. It hit $25.7 million
Compared to,
compared to $14.0 million in the prior year's quarter. So quite a jump.
that is a big jump.
Yeah. And looking at Adjusted EBITDA, the earnings before interest, taxes, depreciation, amortization, that reached $44.9 million,
Up from,
up from $33.3 million. So that gives a pretty good view of their core operating profit engine.
so more sales, but also operating more profitably. That's a really good sign. Tip Ranks also mentioned earnings per share.
Yes, they did. Reported EPS came in at 22 cents.
Okay.
And the notable thing there is that it beat the consensus estimate, which was around 15 cents.
Ah, so they didn't just do well, they did better than expected.
Exactly. Outperformed expectations.
All very strong indicators. Okay, let's dig a bit deeper into how they're getting this growth. Same restaurant sales, that's always crucial, right? What did the sources say there?
Right. And this is pretty impressive. Their same restaurant sales growth was a really robust 10.8%.
10.8%. So existing stores are doing much better.
Significantly better. And the drivers behind that growth are quite revealing.
Okay, tell me more. What's fueling that 10.8?
Well, according to all the sources, it's a combination. A big chunk, 7.5%, was just more guest traffic.
More people coming in?
Exactly. More people choosing CEVA. And then the other 3.3% came from menu price changes and, the mix of items people bought.
So that traffic number, 7.5%, that's really strong. It shows it's not just about raising prices.
Precisely. It signals real demand for the brand, even with those economic headwinds the CEO mentioned. People are actively choosing to go there more often.
That makes sense. It speaks to the brand's appeal. Okay, so that's same-store sales. What about the other growth lever? New restaurants? How are they doing on expansion?
They're keeping up a good pace there, too. All sources confirmed they opened 15 net new CAVA spots in Q1.
15 net new, okay.
Yep, that brings their total count to 382 restaurants, which year over year is an 18.3% increase in the number of locations.
That's pretty rapid expansion. Are they just adding stores in current markets or branching out? I think the CEO mentioned something.
Yeah, good point. They actually entered a new state, Indiana, during the quarter.
Oh, Indiana, okay.
So now they're operating in 26 states plus D.C. That geographic spread is definitely a key part of their strategy.
Okay, so more locations, more people visiting those locations, both feeding that revenue growth. Makes sense. What about how the individual restaurants are performing, those operational metrics?
Right, let's look at AUV, average unit volume. That's the average revenue per restaurant.
Oh, okay.
It saw a healthy increase, too. Reached $2.9 million
Compared.
compared to $2.6 million in the prior year quarter. And importantly, that comparison excludes an extra week they had in fiscal 2023, so it's a cleaner like-for-like comparison.
Good clarification.
Yeah.
So average stores are bringing in more money. How's that impacting profit at the store level?
Well, the CVA restaurant-level profit dollar amount was up nicely, $82.3 million, a 27.4% increase year over year.
Okay.
But the margin, the KVA restaurant-level profit margin, actually dipped just slightly, from 25.2% down to 25.1%.
Oh, interesting. Just a tiny dip at spill. Any reason given for that slight margin compression?
Yeah, the releases point to a couple of things, mainly higher costs for their grilled steak, which they added last year.
Ah, okay. Input costs.
Right, and also ongoing investments in wages for their teams. But These costs were mostly offset by the higher sales volumes.
So costs for steak and labor went up a bit, but higher sales helped keep the margin pretty steady. Makes sense investing in product and people. What about digital? That's huge these days.
Absolutely, and CAVA is doing well there. Their digital revenue mix was 38.0% of total CAVA revenue.
38%. That's still very high.
It is. It shows how important their app and online ordering are. It suggests customers find it convenient and are really using those channels, a strong omni-channel presence.
Definitely. Okay, shifting from the restaurants themselves to overall company costs. General and administrative expenses, G&A, how are they managing those?
Actually, we see some positive signs of efficiency there. G&A expenses were $41.4 million,
Okay.
which is 12.5% of their revenue. Now compare that to last year, $33.8 million, which was 13.1% of revenue back then.
Ah, so the dollar amount went up, but as a percentage of revenue, it actually went down.
Exactly. That's what they call leverage.
Uh-huh.
As sales grow, those overhead costs become a smaller piece of the pie.
Right. Getting more efficient as they scale.
Precisely. And if you look at G&A excluding equity-based compensation, that leverage is even clear. It was 10.5% of revenue this quarter versus 11.1% last year.
Okay. Good signs on cost management. Now, cash flow. Super important for funding growth and, well, everything else. How did they do generating cash?
Net cash from operating activities looked pretty healthy, $38.6 million.
Okay.
However, their free cash flow, which is cash from operations minus capital expenditures, came in at $2.7 million.
$2.7 million. How does that compare?
It's actually lower than the $4.7 million they reported in the same quarter last year.
Okay, so free cash flow is down. That might raise an eyebrow. Any context on why? Is it related to all the new stores they're building?
That's most likely the primary driver, yes. The lower free cash flow probably reflects those increased investments in property and equipment, building out all those new restaurants we talked about.
Right.
So while operations are generating good cash, more of it is immediately going back into funding that expansion. It's an investment in future growth.
That makes sense. Investing cash now to grow later. Okay, speaking of the future, they updated their outlook for the full year 2025. What changed in their guidance? This is where it gets interesting, right?
Indeed. And it's mostly positive news. First off, they increased the number of planned net new CIBA restaurant openings.
By how much?
They raised the range. It was 62 to 66 new locations. Now it's 64 to 68.
So they're feeling even more confident about accelerating that expansion.
Seems like it. More confidence in launching and running those new spots successfully.
Okay, what about sales at existing stores and margins? Did those outlooks change?
They kept steady. They're still projecting CAVA, same restaurant sales growth, between 6.0 and 8.0% for the year.
Still a healthy range.
Yep. And the CAVA restaurant level profit margin guidance also held firm at 24.8% to 25.2%. So stable outlook there.
Any changes on the expense side for the full year?
Just a slight tweak upwards on pre-opening costs. They now expect $14.5 to $15.5 million, up a bit from $14.0 to $15.2 million before.
Which makes sense if they're opening more stores.
Exactly. Directly tied to that increased opening target.
And the bottom line expectation for the year? Adjusted EBITDA.
That got a boost too. They raised the guidance range from $157 million up to a new higher range of $152 to $159 million.
Okay, so overall, a more optimistic outlook for 2025. They're raising targets for openings and overall profitability.
Absolutely. It signals strong underlying performance and, increased optimism for the rest of the year.
Always good to see a company raising guidance. Now, CAVA also mentioned some strategic pillars for 2025 in their materials. Can you quickly outline those, give some context?
Sure. They laid out four main pillars. First, expand our Mediterranean way. That's clearly about growing their footprint, opening more restaurants.
Right.
Second, develop personal relationships. That's about customer engagement, loyalty programs, digital interaction, building that connection.
Makes sense.
Third, run great restaurants. Focus on operations, customer experience inside the stores, just execution.
Standard, but important.
And fourth, operate as a high-performing team. That highlights the importance of their employees in making it all happen. So those four pillars kind of frame their whole strategy.
Got it. Expand, connect, execute, empower the team. And it sounds like they're also working on keeping the brand, fresh and exciting. Any specific marketing things mentioned?
Yeah, they highlighted a Spice World campaign.
Mm-hmm.
It featured new, spicier items like hot harissa pita chips and a steak plus harissa bowl.
Ooh, spicy. Tapping into that trend.
Seems like it. They even shared some customer feedback like, oh my God, I need this. So, sound like those new items hit the mark. Positive buzz drives traffic, right?
For sure. And wasn't there something about a chip character?
Huh? Yes. For National Pita Day, they introduced Peter Chip, a playful personified pita chip.
Peter Chip. Okay.
Yeah, it's a fun way to engage on social media, show some brand personality, make them a bit more memorable, maybe.
Definitely memorable. Now, okay, overall, a lot of positive results here. But the Motley Fool article did mention some concerns. We don't have the specifics, but it's a reminder, right, that there's always more to consider.
That's a really important point, yes. While these Q1 numbers are strong, a full analysis always looks at potential risks too. Competition in the fast casual space is intense. There are broader economic factors.
Right, need the full picture.
Always.
And finally, CAVA uses non-GAAP measures like Adjusted EBITDA. Just briefly, why do companies report these kinds of numbers alongside the standard GAAP ones?
Good question. Companies use these non-GAAP measures often as supplementary tools. The idea is to give investors what management sees as a clearer picture of the underlying operating performance.
How so? By excluding certain things.
Exactly. They typically exclude items that aren't seen as part of the core day-to-day business. Things like stock-based compensation, maybe one-off restructuring costs, stuff like that. It helps compare performance period over period more easily, focusing on ongoing operations.
Got it. A different lens to view performance. Okay, so let's try and wrap this up. What are the biggest takeaways from this deep dive into TAVA's Q1?
I'd say the takeaways are definitely positive overall. You've got really strong revenue growth. You've got impressive same-store sales driven by both traffic and price mix, which is healthy.
Yeah.
They're continuing that aggressive expansion, opening new stores. Adjusted earnings beat expectations. And crucially, they raised their outlook for the full year.
Lots of positive momentum. And that milestone the CEO mentioned, passing $1 billion in trailing revenue.
Right. Over $1 billion in trailing 12-month revenue. That really cements their position, doesn't it? Shows they're a major player, a leader in that Mediterranean fast casual space. Significant scale, strong brand recognition.
So for you listening, maybe think about what KAVA's success signals for the wider fast casual world. Are they setting a pace? Does it tell us something about what consumers are looking for right now? Healthy, customizable, maybe a bit experiential.
Yeah, it's a really compelling snapshot of a company doing well in a tough market. If you want to dig even deeper, KVA's investor relations site has all the full reports. And, maybe trying the food yourself isn't a bad way to understand the brand either.
Ha, first-hand research. Well, it definitely sounds like CAVA is cooking up more than just tasty food. They're delivering some seriously strong financial performance and have big plans for growth. Until our next deep dive, keep digging deeper.